All right, thank you. Good morning or good afternoon, depending on where you are, and welcome to our webinar. I'm Mike Vandervelde with the Federal Reserve Bank, and I'm going to be your facilitator. Today, we're going to take a look at account management tools and information, and let me be the first to thank our presenters. Hailing from the Federal Reserve Bank of Minneapolis, Credit Payment Systems Risk Department, they are Jean Quinn Davis, Paige Anderson, and Dan Hartzheim. Combined, these folks have over 70 years of experience. Before we dive into the content, I'm going to go over just a few of our logistics. It's important to note that this call is being recorded, and we will post that recording to the FRB Minneapolis website in the coming days. You may have noticed that the webinar tool offered the option to listen to the audio through your PC speakers or over the phone. Now, the quality of the PC audio does depend on your connection, so if at any time you're having some issues, feel free to just dial into that bridge number. And don't forget to keep your mouse handy because we're going to have a few polling questions, and we'd love to get your input. Speaking of questions, we're going to take your questions at the end of today's presentation, and to ask one, you do have a couple of options. You can simply click that Ask Question button in the webinar tool and type one in there. Or you can press *1 on your phone, and that will allow you to ask a live question. We're going to put you in a queue, and again, at the appropriate time, we'll open up that line, and you can speak that question live. Now, if you're on the webinar tool, you may also notice the Materials button there, and you click on that, you're going to see a PDF of today's presentation that you can download. All right, one more quick note. The information presented is intended for institutions in the 9th District, which is the Federal Reserve Bank of Minneapolis. If you are from an institution in another district and you do have questions around account management, please do reach out to your local Federal Reserve Bank. And with that said, we're going to advance over to slide number 2, and I'm going to turn this over to Jean.
Thank you, Mike. Before we get to today's agenda, can we take a quick poll of how many of the attendees have an account at the Fed?
All right, great. So let me open up that poll right now. I'm going to pose that question, and the question does say, do you have an account at the Fed, yes or no? So go ahead and just click on your answer. I'm going to give you just a few moments to do that. And if I had some Jeopardy hold music here, I would play that, but I don't. But hopefully you're all humming that in your head right now. All right, so let me go ahead and stop that, and let's take a look at those results. So it looks like a whopping 90% said yes, and only 10% said no. All right, let me shut down that poll and turn it back to you, Jean, for the slides.
Thanks, Mike, and thanks, everyone, for your responses. Today, I'm going to go quickly over the agenda, basically what is a Fed account, some things to consider when managing your Fed account. At that point, I'm going to turn it over to Paige for the meat of the presentation, some tools to help you manage your account. And then we'll go to Dan, who will close the resources, and we'll open up the presentation for some questions. So let's start with what is a Fed account. According to Operating Circular Number 1, which is what you need to start the opening of an account process, the master account is the official title of an account at the Federal Reserve Bank. Most commonly used is Fed account. You may also hear people refer to it as a reserve account or a clearing account. What your institution calls it is most likely dependent on how your institution uses its account here at the Federal Reserve Bank. Also, you'll see that at the bottom, we use the phrase depository institution followed by DI, and I'll be using those interchangeably throughout. So next we'll talk about the purpose of the Federal Reserve account. One of the main purposes is for an institution to settle transactions through its Fed account. Transactions such as wire transfers, check processing, ACH, cash and currency, loans from the discount window and the associated payments and interest of that, and other interest payments or other account charges. Additionally, an eligible DI can hold the portion of its reserve requirement that is not meant by vault cash in its own vault, you can hold that in its Federal Reserve account. You can also generate or earn interest on those reserves that are held here at the Fed and any excess balances. And we'll talk more about reserves during next week's webinar on reserves management tools and information. So any of the transactions I talked about could be going on in your Fed account here. There are institutions that only use their Fed account for wire transfers, and they have everything else settled through a correspondence. There are, of course, institutions that have everything settled through their Fed account. That is a business decision for each institution. So, this credit PSR area, in its role of administering the payment system risk policy and the Reg D, these are some of the things that we have to consider when we look at the accounts here at the Federal Reserve. So these are the things that we're going to talk about today. The first thing is overnight overdrafts. What's on the slide is, on slide 6, is that it's an unauthorized extension of credit. Basically, when your account here at the Fed closes in a negative position at the end of the day. The official expectation from the Federal Reserve is that, of course, institutions will effectively manage their account so they don't have a negative balance at the end of the day. And in fact, the Board of Governors of the Federal Reserve considers overnight overdrafts to pose a greater risk to reserve banks than granting them discount window loans, primarily because there's no assurance that the overnight overdraft is either collateralized or will be funded the next morning. Which leads us to overdrafts during the day, or what is known as intraday credit. The Federal Reserve Board developed the Payment System Risk Policy, also called the PSR policy, to address risks that the payment systems as a whole present to the Federal Reserve, to the banking system as a whole, and to other sectors of the economy. The objectives of the policy are to foster the safety and efficiency of payment and settlement systems. So the PSR policy establishes the limits on the amount of intraday credit that an institution may use in its Fed account. These limits are intended to be sufficiently flexible to reflect the overall financial condition and operational capacity of an institution holding a Fed account. So this is probably a good place to mention that DIs are allowed to incur daylight overdrafts in their Fed accounts. That's okay. What the Federal Reserve monitors is a breach of their daylight overdraft cap. That is, an overdraft that exceeds the limit that is established by an institution's net debit cap, which we'll discuss on the next slide. Pardon me again. So if there are breaches, the Federal Reserve may counsel an institution and discuss ways to reduce excessive use of intraday credit. However, I do want to point out that all usage of intraday credit, regardless of whether it's below your net debit cap or breaches it, is subject to a fee. So net debit caps on slide 8. Under the PSR policy, every institution that has a Federal Reserve account is either assigned or may establish a net debit cap, and that's what determines the limit of intraday credit that the institution can use. An institution must be financially healthy and have access to the discount window in order to adopt a positive net debit cap. The PSR policy also allows reserve banks to protect themselves from the risk of loss by potentially reducing net debit caps, imposing a requirement of collateralization or a specific account balance, rejecting or delaying certain transactions that might cause or increase a daylight overdraft, and in extreme cases, prohibiting an institution from using Fedwire. So the net debit cap, as we said, is the maximum amount of overdraft an institution can have in its Fed account. So the cap category and an institution's risk-based capital is what determines the net debit cap. We'll talk about the cap multiple on the next slide. We did think about defining risk-based capital here, but because it differs from type of institution to type of institution, we'll just refer you to Appendix C of the Guide to the Federal Reserve's Payment System Risk Policy on intraday credit, and we have a link to that on our resources slide. So slide 10 lists the different cap categories that there are, going from the most restrictive to the greatest. Obviously, there is the zero cap, where an institution is not allowed to use any intraday credit. The most common one, the exempt from filing, or sometimes just referred to as the exempt cap, requires very little in the way of a healthy institution to do anything. They don't need to do any self-assessment or submit a board of directors resolution, and it allows them to have daylight overdrafts up to the lesser of $10 million or 20% of their risk-based capital. The next cap, the de minimis cap, does require an institution to submit a yearly resolution from its board of directors, and that will allow it to incur daylight overdraft up to 40% of its risk-based capital. The last three are what they call self-assessed caps, and there is a process that an institution goes through assessing various controls, creditworthiness, policies, etc., and depending on the outcome of that self-assessment and with the board of directors resolution, it allows the institution to incur daylight overdrafts up to those specific multiples of the institution's risk-based capital. So the next slide talks about measuring daylight overdrafts, which is what the net debit caps refer to. I'm not going to go into detail about this, but measuring daylight overdrafts is an ex post system. That means it's done after the fact. So regardless of the time that transactions are sent to the Fed's accounting system, these are the times they post for the purposes of measuring a daylight overdraft. If you click that link at the bottom, that will bring you to more specific detail. On the next slide, an institution that is responsible for satisfying its reserve balance can hold those balances here at the Federal Reserve for an average over a 14-day maintenance period. And if the institution does not hold a sufficient average balance in that period, it's considered to be deficient and could incur a charge. These will be covered in more depth during next week's webinar on the reserves management. So other things that you might want to keep in mind when you're managing your Federal Reserve account is the discount window and collateral. So on slide 15, we'll start with the discount window. By law, any depository institution that maintains reservable transactions as defined by Reg D can establish borrowing privileges at the Federal Reserve's discount window. Eligibility to borrow, however, is not dependent on whether or not you use Federal Reserve services or if you even have an account here at the Federal Reserve. You can establish access to the discount window, and have any loans and associated repayments settled through a correspondent. So on the next slide, we'll talk about a couple of the loan programs available through the discount window. The first one is primary credit, which is intended as the principal safety valve to ensure adequate liquidity in the banking system. It's intended as a backup source of short-term funds for generally sound depository institutions. And by short-term, that usually means overnight. Secondary credit is what's available for the funding needs of DIs that don't qualify for primary credit. And use of secondary credit is very rare. The last program in the discount window is the seasonal lending program. And it's intended for institutions with demonstrated liquidity pressures of a seasonal nature. That is, DIs that have fluctuations in their deposits and loans that are caused by construction, college needs, resorts, farming, and other seasonal types of financial activity. It is available only to institutions with less than $500 million in assets. So DIs that wish to participate in the seasonal lending program must submit an application to the Fed every year for analysis to confirm a continued need for this type of borrowing. If approved, the DI may qualify for funding up to 9 months during the calendar year. So, of course, like most loans from the discount window must be secured by collateral that is acceptable to the Federal Reserve. Which brings us to collateral. What's important to know? Why to pledge, what to pledge, how to pledge, and who to contact. On slide 19, why to pledge? The primary reason is so that you can borrow from the discount window. Another option is that you can use collateral pledged to offset any fees you might incur that are associated with daylight overdraft usage. And lastly, the Federal Reserve may impose a collateral requirement on an institution, and the reasons for that could vary from institution to institution. So, the next slide. What is acceptable to pledge? Most performing or investment grade assets which are held by DIs are acceptable. Of course, U.S. Treasuries are the gold standard. Municipal bonds and loans are other types of collateral that is accepted. For more detailed information, you can see the collateral margins table and the Federal Reserve collateral guidelines available at that link, frbdiscountwindow.org, at the bottom of that slide. Additionally, in cases where acceptability is not clear, you can call your local Reserve Bank and we will be happy to assist you. So how to pledge? Like most interactions with the Federal Reserve Bank, you've got to execute legal agreements and get set up at the discount window, which of course includes a collateral agreement. Then you can either deposit your collateral online through the online securities, Fedline through the web, or Fedline Advantage, or you can have a correspondent or a third-party participant deposit securities on your behalf. Another arrangement is to apply to participate in the borrower in custody program, which is also known as the BIC or BIC arrangement. So the BIC arrangement allows DIs to pledge loans to the Fed without physically delivering that collateral to either the Fed or another custodian. Detailed information on that program is available at that frbdiscountwindow.org website on the previous page. And the collateral guidelines, also referenced on the previous page, contain specific information on how to submit deposits. So now I will turn you over to Paige for the meat of the presentation.
Thank you, Jean. So that brings us to the third agenda item, which is account management tools. So while Jean has talked to you about the sorts of things that you might need to consider or think about when you have a Fed account, I'm going to talk about the tool, the reports and information you can use to monitor and manage your Fed account activity. And I'm going to begin with Amy, but first we'd like to take another quick poll. And our question is, do you have access to Amy, and if so, do you use it?
All right, I'm going to open that up right now. And you have three options to choose from. Yes, and I use it, or yes, but I don't use it, or no. So let me just give you a few seconds to go ahead and select one of those answers. Again, just clicking right on the screen there will make that selection after you click the submit button. So I think I've maybe stalled long enough. Let me go ahead and stop that and show those results right back to you. And it looks like 64% say yes and I use it. 21% say yes, but I don't use it. And 14% say no. So let me stop those results and turn it back to you.
Well, all right. So for those of you who are currently using Amy, perhaps we'll show you something today that you haven't seen before. So Amy stands for Account Management Information System, and Amy can be accessed at any time throughout the Fedwire day. And Fedwire operates for 21.5 hours each business day, opening at 9 p.m. Eastern Time on the preceding calendar day and closing at 6:30 p.m. Eastern Time the next day. There's a lot of Fed account information you can get to through the various links on the front page of Amy. Today, however, our focus will be on account balance information, daylight overdraft reports, and collateral reports and information. So Amy provides a way for you to view transactions that are posted to your Fed account in real time or near real time. Amy pulls in transaction information from a variety of FRB systems and provides account balance, daylight overdraft, and available balance information. Additionally, through Amy, you can access daylight overdraft reports that are generated at the end of each business day or after a maintenance period ends. And then lastly, I'm going to show you a couple of collateral reports that are generated at the end of each day. So before we take a look at Amy, I'm going to toss a disclaimer at you. Amy should not be used to replace the DI's own internal processes or documentation for managing its Fed account. The difference between a DI's internal documentation and the information that is showing in Amy can be a sign of errors or omissions in a DI's internal information or errors in transactions that are processed by the Reserve Bank. Amy should be used to ensure that transactions are being processed as expected. For example, if you're expecting a wire at a certain time and you're not seeing it in your Fed account, you might want to contact the source of the wire, and the source could be a correspondent, to find out what's causing the delay. And then, what if you notice a $20 million cash letter charge in your Fed account and you don't think it belongs to you? You might want to research its cause. So by being proactive in researching missing or questionable transactions, you could potentially avoid a daylight or overnight overdraft situation. So the first thing we'll do is go into Amy. And I should mention here that before you can access Amy, you have to have Fedline Web, which is also known as Fedline for the Web, or Fedline Advantage, and have gone through the Amy setup process, which includes being credentialed. We've included some links at the end of the presentation that will help move you through those processes if you need to be set up. So now we're going to log into Amy. First thing you do is go to www.frbservices.org and click on Access Fedline, which is at the top of the page. Then you click on the green box that says Access Fedline Home. Once you've logged in, you can click on the tab at the top left side of the page labeled Accounting, and that will bring up the Account Management Information link. On the left side of the lower screen, under Accounting Applications, click on the Account Management Information link. And then once you click on that link, you'll be brought to the screen on the next slide. So on the Account Management Information screen, on the navigation bar under Account Activity, you can click on the View Balances link. So on the next slide, to view your institution's summary account balance, daylight overdraft balance, and available funds balance for the current day and time. The activity you'll see is the activity that's posted to your Fed account up to the point in time that you generate the screen. So if you pull the screen again 30 minutes later, the information you see may be different because additional transactions may have posted to your account during that time. The View Account Balance Activity link allows you to drill down from summary information to individual details for transactions that have occurred in your Fed account so far on the current business day. The only prior information you can pull is your end-of-day activity for the previous business day. And you can choose previous day in the date drop-down box toward the top of the page to view your end-of-day balances for the previous day. So if you want to look at the detail of the transaction that you're seeing, you can click on the tiny arrows on the left side of the specific entry under All Other Activity, and you'll be able to drill down to the point where you can view various details that are tied to one specific transaction. So here's the detail for a cash letter credit we saw on the previous slide. From the top of the screen moving down, some of the information shown in this view includes the transaction amount, the description, and you can see this is a country cash letter, whether the transaction is a debit or a credit, the original cash letter amount, the portion of the cash letter amount that is immediate, the deferred portions of the cash letter amount, an FRB contact phone number you can call if you have questions about the transaction, and then also notice that you can see the posting time at the bottom. And the posting time is the time the transaction posted to the Fed's accounting system. And then lastly, the daylight overdraft posting time. And this is the time the transaction will post to your Fed account according to the posting times for measuring daylight overdraft. And if you recall, Gene showed you the posting times on slide 11. So the View Daylight Overdraft Balance Activity and View Available Funds Balance Activity links allow you to view your daylight overdraft balance and available funds balance information in real time for the current business day. This is the sort of information that can assist you in complying with the payment system risk policy. Note that the information under your account balance, which includes the available funds balance link, can only be accessed by Fed account holders with non-restricted access. So now we'll go back to the front page of Amy, and we can take a look at the reports you can use to verify daylight overdraft and collateral activity that occurred on the previous day. So under Related Links, if you click on Access Other Applications, you'll see that there's a link for daylight overdraft reports. When you click on daylight overdraft reports, a link for each of the following reports will appear: the intraday position report, the end-of-minute detail report, the daylight overdraft monitoring summary, the preliminary or final daylight overdraft charge report, and the daylight overdraft history report. We're going to begin with the intraday position report. This report provides you with your daylight overdraft balance throughout a single Fedwire day. It's generated on a daily basis, even if your institution isn't in an overdraft position, and can be viewed for the most recent 29 business days. Note that the report shows your institution's cap type, cap amount, opening balance, closing balance, and then underneath that information on the left side of the report, you'll see the time in Eastern Time. The information you'll most likely want to focus on if you use this report is the end-minute balance column and the total daylight overdraft column. This report will show you at what times your institution is using daylight credits. The next report is the Transaction End-of-Minute Detail Report. This report lists all end-of-minute balances for a single Fedwire day. The report is produced daily even if no daylight overdraft activity occurs and can be viewed for the most recent 29 days. Note that the report shows your opening balance, and again on the left side of the report you'll see the time in Eastern Time. Then moving through the report columns from left to right, we've highlighted some of the more typical information that will appear on the report. Tran code or type, subtype, IF, timestamp, or reference number, and underneath that, the end-of-minute balance, transaction amount, and underneath that, the unencumbered collateral balance, the posting amount, and that's the amount of the transaction, and underneath that, the uncollateralized daylight overdraft amount. So this report contains all the transactions that posted to your Fed account during the Fedwire day, at what time the transactions posted, any of the previously mentioned information that's applicable, and how the transaction impacted your balances. The next report is the Daylight Overdraft Monitoring Summary. This report shows you a listing of peak daylight overdrafts, if incurred, for each Fedwire day during a maintenance period. If you don't use daylight credit during a maintenance period, no report will be generated. The report can be viewed for the 8 most recent maintenance periods. The report shows your cap type and amount, and then moving from the left side to the right, the columns begin with the date, and then the time in Eastern Time, net debit cap amount, daylight overdraft capacity, total peak overdraft, excess over daylight overdraft capacity, and if there's an amount in this column, it means you've reached your cap. Then the cap utilization ratio, unencumbered collateral value, and the uncollateralized daylight overdraft amount. This report provides you with a quick way to check whether your institution used daylight credit in the previous maintenance period. So the next report is the Daylight Overdraft Charge Report. And there are 2 versions of this report, a preliminary report and a final report. The preliminary report provides daylight overdraft charges for the most recently completed maintenance period. The report shows charges that have been calculated but not yet assessed. The report is only created if a charge is calculated and can be viewed for the 8 most recent maintenance periods. The final report provides final daylight overdraft charges for a specified maintenance period, and that's typically the maintenance period that ended 2 weeks ago. And it includes charge adjustments and/or exclusions if applicable. The report is generated by maintenance period order and will display final within the title when charges have been assessed. The report is created only if charges are generated and can be viewed for the 8 most recent maintenance periods. At the top of the page in the heading, the report is labeled preliminary or final. Underneath that, you can see the maintenance period that the report applies to, and then the charge date. Then starting on the left side of the report and moving to the right, we've highlighted some of the more relevant columns beginning with the date, and this is the date of the overnight, or rather daylight overdraft, the average total daylight overdraft, the daylight overdraft charge amount, daylight adjustments if applied, or rather daylight adjustments applied if applicable, and then the final charge is applied. And then note that the total charge of $10.74 is less than the waiver amount of $150 and therefore will not be assessed. So last is the Daylight Overdraft History Report. And this report provides a historical listing of peak overdrafts and any associated charges for the past 6 maintenance periods. It can be viewed for 8 maintenance periods and is generated even if an institution has no daylight overdraft activity. So even though this report is somewhat self-explanatory, some of the information on the report that would likely be of interest to you, starting at the left side of the report, is the maintenance period end date, the largest or peak overdraft amount during the maintenance period, and the daily overdraft charge if applicable. So that wraps up the daily overdraft reports, and next we'll take a look at the available collateral information and reports that you can access through AMY. First, we're going to take a look at the near real-time collateral information. So we'll go back to the front page of AMY. And on the navigation bar on the left side of the screen under Collateral Reporting, if you click on the View Collateral Balances link, you can view your current collateral totals in near real time, and which are separated into 2 totals. One total is total collateral pledged for FR purposes, and discount window borrowing is a common purpose, and the other is total collateral pledged for Treasury purposes. The actual collateral value for both totals is also provided. And note that the collateral value is after margins are applied. On the lower half of the screen, you can see any increases or decreases by asset type in collateral collateral pledged for FR purposes. The next screen we'll look at by clicking on the View Detailed Current Day Collateral Activity link displays an institution's collateral activity chronologically throughout the current day. This screen displays transactions that institutions have initiated, including account transfers, deposits, and withdrawals, as well as certain changes to collateral values initiated by the reserve banks. For example, revaluations or revals, market value maintenance, and collateral value maintenance updates. And a key to the transaction types is shown at the bottom of the screen. Institutions can view their opening FR collateral account balance, and on each row, a cumulative ending balance that reflects the change in collateral as a result of each transaction. This information is updated throughout the day, and institutions can view updated values in near real time. The time of inquiry will display in the upper section of the screen. So, in addition to the near real-time collateral information, there are two reports that are generated at the end of each business day and can be downloaded. The first report is called the Statement of Collateral Holdings, and the second report is called the Summary Transaction Listing. The Statement of Collateral Holdings lists an institution's Federal Reserve collateral holdings at a unique identifier level as of the current day. In the example we're showing you, you can see collateral pledged under the Borrower in Custody Program, or the BIC program, which is indicated in the location column by the letters BIC, again, which is BIC. If Treasury securities were being pledged, we'd see CUSIP numbers in the identifier column. And lastly, the Summary Transaction Listing Report lists out an institution's collateral transactions grouped by transaction type, as you can see under the transaction type column. For example, you can see deposits, withdrawals, and revaluations or revals for the current day. Also, you may see the transaction type CVM, which stands for Collateral Value Maintenance, displayed quite frequently, and that's why we've actually noted that on the slide. And this is because collateral is constantly being revalued based on market conditions. So now I'm going to turn it over to Dan, and he'll review some links to the information that we've shown you today.
Thanks, Paige. That concludes our high-level overview of the account management information tool and some of the reports and information that you can use to monitor and manage your Federal Reserve master account. On this slide, we have some links to some valuable resources and information regarding AMY. The first link supplies information on the benefits of using the account management information application. The second link provides step-by-step instructions on how to gain access to AMY. And the third link is the account management guide. It is designed to be a practical resource that will make it easier for your staff to resolve any day-to-day issues you may have about account maintenance or with the account management information applications. On the next slide, we have a continuation of some more resources information links. The first two links provide information on our payment system risk policy, which contains the rules you should follow in managing your Fed account. FRB Discount Window org provides additional information regarding the payment system risk policy and the discount window. And the collateral guidelines link at the bottom provides detailed information on accessible types of collateral that can be pledged to the discount window. And then on the last slide, if you want more detail regarding anything that we talked about today or showed you today, please give us a call at the number on near the top. For institutions that are not in the 9th District, please contact your local Federal Reserve Bank. We will supply everyone who attended today's presentation a link to a recorded version of it once we have it uploaded to the Minneapolis Fed website. And before we take any questions, we would like to thank each and every one of you for attending our presentation today. And back to you, Mike, to answer the questions.
All right. Thank you very much. Let me do a couple of things here. First is a quick reminder. You can submit questions in two ways. One is, if you're on the webinar tool, just go ahead and click that Ask Question button in the bottom left-hand corner and type one in there. Or you can ask us a live question. Just press *1 on your phone, and we're going to get a little pop-up there, and I'll coordinate with our operator to open up your question or your line so you can ask that question live. So while you're doing that, let me go ahead and just jump over to one and read that now. It says, what is the interest rate change when you borrow from the discount window?
That's a good question. I'd be happy to answer that. Each of the programs I mentioned earlier, the primary, secondary, and seasonal loan programs, have slightly different rates. For the primary credit, the current rate is 0.75%. The secondary credit program has an interest rate of 1.25%. And for the seasonal program, that interest rate is currently 0.25%. And those interest rates can and have changed and will in the future.
All right, very good. I appreciate that. And let me just remind folks again a couple of ways to submit questions. You can click that Ask Question button and type one there, or you can press *1 on your phone and ask a live question. So let me just refresh my queue here. It does not look like we have any questions at the moment, but maybe people are typing as we speak, so let me just pause and give them a moment to do that. We do have 15 minutes left in the session, and you have obviously a bunch of knowledgeable folks here that can handle your questions. So anything on your mind now would be a great time to ask it. So it looks like our phone side is clear. Let me refresh again. It still looks like our inbox is clear. Let me do this. Let me ask for any maybe closing comments that any of our presenters may have, and that may also give folks an opportunity to submit any questions. Any thoughts?
The only closing thought I have, too, is just to reiterate that if you do think of questions later on, do give us a call at our toll-free number. You could also email any questions or thoughts to the email address, which is on that last slide.
All right, very good. Anyone else have closing thoughts?
No.
No.
All right, that's fair enough. So let me just do another refresh of my inbox here, and one did just come in right now, and it says, can we get any of the reports distributed to us?
The webinar, the
reports from Amy. I think if I understand the question, they're asking if the reports can be pushed out to them, or do they have to go into Amy and pull them?
Yeah, I'm guessing that it's a push, and maybe let's answer it that way. And if the asker wants to make a clarifying statement, that'd be great.
If that is the question, then yes, the answer is that you do have to go into Amy and pull the reports.
Okay, and they did just make a clarifying statement. They're asking about a push. So from what I'm hearing, a push is not an option. Is that correct?
That is.
All right, good question. Thank you for that. And let me refresh again and see if there's any other questions. We still do have a bunch of time, but if there are no other questions, it is definitely okay for us to end a little bit early. But I do want to give maybe 5 more seconds just to give everybody an opportunity in case they're typing in. Okay, and as stated, you do have an option for questions at any time through the email address that is on that last slide. So it does not look like, looks like we may have one coming in on the phone side. So operator, if you want to go ahead and open that up. And caller?
There are no questions on.
Oh, you have none. Okay, sorry. All right, perfect. In that case, I'm going to wrap us up. I want to thank you all for joining us today. I'm going to push out a quick survey, and I'm going to do that right now. So if you're in the webinar tool, that's going to pop up. Go ahead and click on that link and take that survey. We really are interested in your feedback. Now, that same survey is going to be sent to you in an email, and you only have to fill it out once. So either through the webinar tool right now, which would be great while it's fresh, or through email. With that said, again, I want to thank our presenters, Jean, Paige, and Dan, for their time. And lastly, don't forget to join us next week as we tackle the topic of reserves management. That said, everybody have a great day, and we'll catch you next time.